Welcome back, folks. Welcome back, guys. Good day. How how was your day? And how was trading today? Like I said yesterday, it's been an amazing day. Although it was very amazing. Today was a perfect day, perfect day, sweet market delivery and all that. Aside that, I hope you are developing. You are working on the progress. You are developing more ideas on how to handle this market. You are working on yourself and you're working to be a better and a more competent trader. And this is one of the things you will end up doing someday. So like I said yesterday, I am not doing this content for investment purpose. It's for educational purpose. And if you decide to do to involve money with it, that is on you, because I'm not going to be the one to click the button for you whether buy or sell. And if you decide to use this kind of tutorial as a lecture, as a guide for you, that is your own choice. Whichever you decide to do, is the ball is in your court. And I hope what I'm doing here can get you started, get you um give you a head start on how to read this market daily, how to journal your trade daily, and all that. So, if you like my content, please do subscribe to this channel and don't check on the link below on the comment section on the link below. Follow me on Telegram, follow me on Telegram and Instagram or Twitter. We are everywhere. So let's dive into today's business. Yes, we have much, but not really that much to say today. So what you're looking at right now is the Euro US dollar daily contract for Tuesday, 23rd of January 2024. And the Euro US dollar daily contract for Tuesday, 23 January 2024 deliver nicely as called out from yesterday projection. Meaning that today price delivery really did give us a nice price delivery, a nice price delivery. So that is very big head start to get us, started, get us going perfectly. Now, the early trading hours of today, Euro repriced into the daily liquidity void and sweep previous day high buy side liquidity before engineering and accumulating, short position. That is before giving us what low price delivery. And now I am pleased to see Euro delivered lower and take out the sell side, which is the draw on liquidity we call out yesterday. Meaning I'm very pleased to see that we take out this low, which was our draw on liquidity that I bring you guys attention to yesterday. So the up close candle form on Friday last week trading is a significant PDRA. If there is a fair value gap between, we can use you can also use it to support the bearish buyers and to support the market to move lower. Meaning this up close candle, which is the Friday candle, this green up close candle, um, it has the perfect characteristics of a bearish order block. And if we are delivering lower prices, the any up close candle is supposed to support the market to go lower. Okay, so we see that as a very significant area, and I'm not really pleased with how we closed today. If at all we, you know today is really trading to, like, the market is really sorry guys. Omo, hmm, this weather is very, it's not for me, like seriously. So as I was saying, if we are really going to take out this particular low, we are supposed to see this candle close, you know, it shouldn't come up like this. But our bearish bias still remain. We're still going to be looking for buy side delivery, sell side delivery, sorry. Still going for look for lower prices. And I'm not sure if tomorrow is going to create a lower low or take out this low, since we really did not, except if there is a great news event. I'll check my calendar later. If there's a great news event, then we might expect this one to be taken, and we get into this bearish order block. And for it to be very effective, we are not supposed to waste time on this and to take it out impulsively, so that any buyers that stock their, their position here can get, can be used as a liquidity. So let's check the dollar index. So this is the dollar index daily contract, and as you can see, we have the our bullish order block here, and we see this particular price delivery, and this down close candle here to support our bullish move. So any down close candle that form in an in a bullish market is supposed to support the price to go higher. So we anticipate for that, and we really did take out this high too, which is very significant, and we price back into the range, and this is the trading range for today. And I hope this is enough for the daily. So we go to the 4 hour contract. So this is the euro US dollar 4 hourly contract, and well, there is something I have not tell you guys. Casting forward, I favor euro US dollar to take the drawn liquidity, meaning the drawn liquidity to still remain in buy side. That is, I anticipate to see lower price delivery on euro. Now, euro US dollar is at second phase accumulation, and that implies to see euro distribute a large range lower price before the third phase, if euro is willing to leave the higher time frame trading range. Let's go back to the daily. Sorry, guys. So on the daily, this is the first stage accumulation, second phase accumulation, and the theory for sell side program, or for market maker sell model, is that the second phase distribution is supposed to have the higher, momentum to deliver price to external range liquidity. So if this is going to be effective, we are supposed to see it deliver price very fast before we see this third phase accumulation. That's just what I wanted to add. So let's go back to the 4 hour. So the way US dollar 4 hourly contract shows nicely the price distribution of today trading ranges. On the 4 hour, we can see how euro price higher and accumulate buy stop to engineer lower prices. Meaning this particular area, we see how it purge and accumulate these buy stops here to deliver lower prices. We can also see that euro distribute lower impulsively, leaving behind a fair value gap and inefficiencies. This is fair value gap, this is fair value gap. These inefficiencies in price signify how impulsive the market did deliver for today. Now, casting forward, we can call out the 4 hourly ICT bearish order block plus fair value gap, or CB, which we anticipate to support lower prices delivery going in from tomorrow or next. Meaning that this particular 4 hourly bearish order block and this the which is the difference between this candle high and this candle low, which is the fair value gap, to support market to go lower. I think because if we are really bearish, we shouldn't see this high taking. But due to the way the market is trading now, we might see an internal range date like tomorrow will not take out sell side nor buy side, except there is a news event. But just go into your chart and analyze, look at it yourself. Then if you have to trade, please do trade with consciousness. Be very conscious. But overall, we still anticipate for euro to take out this sell side rather than this buy stop. So let's go to the dollar index and see how euro is trading on the 4 hourly contract. So this is the dollar index for hourly contract, and we can also see almost same thing happening here. We have a bullish order block, and a fair value gap, which is BC. For this one is BC for the euro, which is CB, which is sell side imbalance, buy side inefficiency. While this one is buy side imbalance, sell side inefficiency. So I anticipate to see each hold price and continue the price delivery, and we'll be targeting this high and this weekly internal range liquidity as our draw on liquidity. And well, all that being said, it's just so sweet. We see how we take out this low, and I did call out this fair value gap yesterday. If you didn't watch it, go back and watch it yesterday, which is January 22, which is Monday, and watch out how I called this out yesterday because it looks so clean and pure, and I said we might trade into this area before saying, and that happened very perfect. You know, it's just it's just the way things happen. If you know what you are doing, you just be amazed how things will be falling in place, and it will not be like magic. But alhamdulillah though. So let's go to the hourly contract on euro. Well, this is the hourly contract for euro. There is something that is just so amazing on hourly candle. Like there's something I love about hourly candle. It breaks everything so down, and it's just so good the way price in the the way it shows illustrates the price action for every trading day. And 15 minutes, I love that time frame. 15 minutes, I so much love it. So if it's a woman who gets married, then so the euro US dollar hourly contract, which is 60-minute contract, shows nicely the intraday market delivery for Tuesday, January 2023. 2024. Oh, carry us go back home. On the hourly, we can see euro deliver lower and create an ICT bearish breaker plus fair value gap, and an ICT bearish order block below the breaker, meaning that we have a bearish breaker here, which is an ICT bearish breaker, and it is incorporated with this. I did not just want to add this fair value gap to it. Then we still have a bearish order block here, an hourly bearish order block, which is very which is below this steel breaker. So these two PD arrays, if we did not respect it, then that indicates we are coming up here. So I want to see these two PD arrays being respected and hold price from going higher, going in tomorrow or next. And the daily profile is an obvious 2 o'clock AM candle as the high of the day that swept the buy side before price deliver lower. Meaning this particular candle is 2 o'clock AM candle that swept the buy stops, and the market begin to deliver lower prices. A breaker is something like this: a high, a low, a higher high, and a break of that high, then we can now call that a breaker. Okay, I don't know. I'm not supposed to teach something, but I just want to tell my followers, a breaker block is a candle that is formed after there is a sweep of liquidity and a break of market structure, or a shift. I like the word shift, neither break. A shift in market structure lower. So that is it for okay. The low, sorry, the low of the day is formed at 10 o'clock a.m. New York local time that take out the sell side liquidity, which is the initial drawn liquidity for the day. Meaning that this particular candle is the candle that formed the low of the day, which is 10 o'clock a.m. New York local time, and take out these buy stops, this sell stop. We take buy stop, take sell stop. So what is next? We have sell here, we have sell here. So this is why I'm actually not in sync with the idea that we might take this. It is important that we have to take this if we are going lower, but and this remain on tap. So but the essence that we have take this, there is a chance that we will see and market engineer a new liquidity and trap uninformed traders into the market and take them out before delivering price to the direction in which they intend to do. But what I'm just trying to add is that this is not a safe environment for anyone to go and just gamble or bet on so much, because they can easily change the direction of the market. So you just go in every day, find the recent buy stop that was taken, then you target the sell stop. If we take sell stop, you target the buy stops. And that is just my theory for trading. And you have to do that with a contest. Okay, you have to have a contest in which you are doing that. You're not just doing it because you are doing it. You have to have a context behind what you are doing, and that is what is going to keep you ahead of other traders as well. You don't just jump into the market and start doing shit. You need to have a reason why you are doing it. If you are engaging with price, you need to have reasons, and that is it. And let's go to the dollar index and see how the hourly trade is playing out. So this is the dollar index hourly contract, and as we can see, there is a fair value gap here, a breaker, a bullish order block, a buy side liquidity, sell buy stop that was taken. The market sweep this sell stop, come for this buy stop, and we sweep it and price into the fair value gap. Then we come for this. So that's very impressive to see. And going forward, we can, if we did not respect this, we are supposed to respect it, and if we did not respect it, then we are coming for this. So my bias is still remain bullish for the dollar index and bearish for other peers, other currency like Euro, GBP, and the Australian dollar. So all those other currency, I we're looking for lower prices on them, since it is a risk on and risk off scenario right now. So I hope this video really gives you an insight and it really helps you build your views on this market. And let's go back to our euro. Says let's talk something now. There's something that is I have been missing, which I started integrating on my chart, and everything started becoming so different. I look at the market in a different way right now. So let's go on 15 minutes. I took a trade here today after we swept this short time low. Now there's something that is very important. Okay, this whole price delivery from here to here is the London session. Let me just use this to market. From here to here is the London session, sorry. And this trade from here to here is the New York session. Now, the London session, the New York session. Well, my video is almost finished. I want you to go and start studying price and see how market is delivering. You understand? We take out buy stop before going. We take out buy stop before going. So have a nice day, guys. I hope this video was insightful. If you really do enjoy it, please give me a follow and a